Afternoon, everyone. It's a good week. Last week was a bit unpredictable for so many people, especially for pairs that had the USD as the secondary currency. Most of them were going down and things were a bit unpredictable. Sometimes the market moves in ways that you can't predict based on how you normally look at them. So basically, when you're doing analysis, it's good to always look at different. I call them waves. That's what I personally call them. Waves, like the market is moving in a very predictable way today, maybe for about 3 months or 4 months, but after some time it starts moving in a totally different, in a very unpredictable way. Yeah, so last week it was a bit unpredictable. There were some areas on the Euro USD where it seemed like it was going to reverse, but it continued going downwards, and right now we could be at a reversal. We could be at a point of reversal. I'm not going to show you the chart for Euro USD right now because we've been looking at this over and over and over again. But what I can tell you is, if you're looking at the chart, if your MetaTrader 4 platform is open, you can go to that chart Euro USD. If you look at the previous low points on the chart itself, you have low bottoms, moving downwards. Then on the RSI, you have bottoms that are pushing up. Yeah, so you have higher bottoms on the RSI, then you have lower bottoms on the chart itself. If you look at the MACD, it is it has crossed already from the below the zero line. So that one has already crossed above the moving averages. If you have 50 and 100 loaded in there, then those two have also already crossed. But the volatility is not there yet. The market is not yet volatile, but every sign for a reversal has already, it has already taken. If you load in the Ichimoku, the Chiku span has moved above the price. The cloud is now bullish. That Kujin-sen and the Tenkan-sen, they are in their right positions. Then, I think it's red above blue for an upward move, something like that. But that is how, every sign to give you a reversal has happened there. So the question is this going to be a fake reversal? Is it a fake move by the market to trap many accounts in there, then knock you out later on? That could be, the case, or we could have the beginning of a new powerful bullish trend following this previous bearish trend. It has been bearish for the last, I think the last week was the 4th week. So many weeks, moving strong, bearish at every turn. There was, some signs of a reversal, but then it continued moving downwards. And yeah, so anyway, that's where we are. We look like we're having a bullish reversal right now, and maybe we could be at the beginning of a new trend. So if you have your scalping robots loaded in, and the robots that only buy or only sell, you can start preparing to put them to only buy. Yeah, not yet. We need we need serious confirmation before we start trading an entire new trend. We already have some confirmation, but we need to be sure. We need some price action inside there. We need some resistance levels to be to be crossed. So until that happens, let's keep watching. If there is some very strong bullish movement that gives us the proper the proper appearance for an upward move, then by all means you can go ahead and start buying. And this week is non-farm payrolls. It wasn't last week. It's this week, and that's a very good thing. When non-farm payrolls comes out, if it had come out last week on Friday, the first day of the month, first day of the month, first Friday of the month, meaning it's the right time for non-farm payrolls. If it had just come out then, there wouldn't be time for the consensus to actually build a good case for the actual figure. But right now we have, the people who do the consensus have had enough time. They actually have enough time, because we won't be looking at the non-farm payrolls until Friday, maybe maybe Thursday we can take a look at the event and see the figures that they have come up with. As you know, the consensus is always changing until that day when the event is going to be announced. So, right now there could be some adjustments being made. Maybe they are getting reports from elsewhere, from other analysts, from other data collectors. So, that is still building up. But, for now, right now we can, just be happy that by the time the actual event is announced, these people who do the consensus will have had enough time to prepare and give us a good figure to project what could come out on that day. So we can have some confidence that there is enough time to prepare for that event. Yeah, that is for those who love trading, non-farm payrolls, who love trading news, who like that, the people who like that, that adrenaline, who like, what do they call it? There are people who like zip lining. Some people like zip lining, other people like bungee jumping, other people like, doing those things that look very risky, going on a boat and trying to cross a river where the rapids are. Some people like those things to get their, to kickstart their adrenaline, to give them that excitement. For other people, it's non-farm payrolls. Non-farm payrolls is all those other things combined into one. Non-farm payrolls can give you the best adrenaline that you need. So, come Friday, we're going to be trading that. It's good to do that. I think it comes out every once in a month. So, you don't have to be greedy for it. So it comes out every once in a month. Either you take it or you leave it. But, it's a good, exciting event for traders. And yeah, this Friday, it could be more predictable than other days. If it's not, then we either leave it alone or you gamble on it. Yeah, sometimes you have to gamble if you want to. If you really feel like you must, you either gamble either voluntarily or involuntarily. You might not want to gamble, but then you end up gambling against your will, pushed by yourself. When you're trading Forex, there are two people. There is you and there is the trader. So you might not want to enter that trade, but that trader within you, that person wants to trade it, and yeah, so you end up fighting yourself. That's what causes a lot of depression. When you disappoint yourself, you anger yourself, and you can't do anything to yourself. You just have to live with yourself. And yeah, that's where the bad, that's where people start getting depressed. But anyway, yeah, so non-farm payrolls this Friday, let's get ready. This reverse on the Euro USD, if it's actually a reversal, then just imagine on Friday, the non-farm payrolls might push it up, might, when you're in a trend, that market can easily give you a big push, and it's really nice, if you have your robots loaded in, whatever accounts, whatever trades have accumulated there, they can all take profit at once, which is very, very interesting. So that could be one possibility. And normally when you're in an upward trend, by the way, this is something that you should know. Non-farm payrolls and other big events, they rarely change the trend. They rarely change the trend. So if the event goes against your trend, then there is a very, if you're buying, let's say like if this chart actually reverses and you're buying, then non-farm payrolls comes out. If it goes opposite of your trade, your trend, it could be just one candlestick going down, then another candlestick, come back up to, to follow the trend. It is only in rare occasions where such an event actually causes a new trend to form by, by sheer force. It's very, maybe something like a failed election or a government shutdown, something like that can cause an entire trend to change prematurely. But something like unemployment, like non-farm payrolls, that might not easily push your trend. It may not give you a new trend when you're just in the middle of what you're currently doing. A price it may take some time before it actually reverses. So when it shoots down, you can pick up from down there and buy if price is going against your trend. Yeah, it happened, I think, 2 weeks ago. It was consumer price index, I think, for the Euro USD, and it was for the US dollar, sorry. Then, the price pushed up against the trend. So it went up for about 3 hours, then it came down and really scared. So just in the moment you might lose money, but the aftermath of that event, that's where you can collect some good money in a very predictable price movement. So that is something you should just keep at the back of your mind, that when non-farm payrolls happens, if it goes in the direction of the trend, then you just continue with it. If it goes opposite, that is where you put your pending orders. You put your pending orders when the chart is going up. You put your pending orders down there, so that you start picking your profits from the bottom. So that is something to keep. Just keep an eye out for that. You can look for all the events that have had very big impact on the charts. That is something, by the way, you must do it. Look for all the events on these economic calendars, the previous events announced by the banks, then also those unemployment events, non-farm payrolls, basically any event that had very huge impact on the charts. So look for those events and then go to those charts, look at the trend those charts were in and the impact of those events, and see the aftermath of each and every event. Then from there you can do your analysis in the past periods, so that you know what to do in the future. Yeah, so those historical charts are there to give you those projections, to help you to analyze what happened in the past, so that you can know, you can have a sense of what you're going to do in the future. Just because yesterday's market was yesterday's market doesn't mean that you don't have to look at it, that you want to keep looking at the candlesticks that are coming in the future. Yeah, that is bad. That is very bad. It's good to study what has already happened, so that you're better prepared for the future. So by all means, look for all the events that have happened before, look at the impact that those events had on the chart, then see how they played out against the trend or in support of the trend, and then you will get a sense of what to do in the future. Yeah, also look at those events and look at the statistics in those events. The ones from banks might have interest rate decisions which are normally don't change. The change is in the report or in the speech, and yeah, sometimes people are lazy to read those reports. The report might be 20 pages long, and yeah, it might be boring, and or even the speeches might not be there on YouTube or wherever. So you might be it may be a bit too lazy to go deep into those ones. But other events like consumer price index, those events that have statistics, they normally have the previous figure, the consensus, and the actual figure. So you can look at those statistics, you can see how positive they were for that country, and then you look at the market impact on the chart, and you analyze news like that, so that you're better prepared to trade these fundamental events. Do not always wait for the event to come, then you start panicking with pending orders and what, you can lose your base, you can lose your foundation there, and you can easily make a mistake. So analyze those events in the previous charts, in the previous candlesticks, and then see how to apply that knowledge in the future, and you'll become a better trader. That is guaranteed. You'll become a better trader if you just do that. Yeah, so the charts that today, there is no high impact news. It's a typical Monday. There's no high impact news. Things are just moving the way they want. There are some middle impact events, but nothing really special. I wanted to look at some charts. I wanted to look at some not these common charts of Euro, USD, and whatever. I'm starting to go into charts like the Nasdaq, the Dow Jones Industrial Average, then the S&P 500 Index, the charts of the MetaTrader 4 platform. Trying to load some account here, and anyway, I'm looking at those charts on the MetaTrader 4 platform, those index charts. Why on MetaTrader 4? Because I can easily make a robot for them. Yeah, and that's another thing. Robots and manual trading, there is no conflict there. Yeah, do not have a conflict between trading manually and trading robots. Do both, because the platform has, it has room for robots and it has room for manual trading. So they are both there. If you get a machine and the machine has a button you never push, you'll ask yourself, what does that button do? Because you never you never push it. What does that mean? Don't you know how to use the machine? Don't you know how to operate it? Like, what does that button do? Yeah, so it's good to know all the features that you have at your disposal. You have so many charts. Yeah? There are so many charts these days. You have charts of indices, futures, currency pairs, metals. Yeah? You basically have, there's a variety of charts to choose from. Then your trading style, there are so many indicators you can use, or you can be a naked trader, like some strong-headed people, naked traders. No indicators, no trend lines, nothing. Guy just looks at the chart and just says it's going up. Why? I know it's going up, so let's buy. So that's what naked traders do. You just look at the chart without any sort of indicator, and you feel you feel like you have to buy. Then I tried that sometime with my friends, and naked trading, it's something terrible. Okay, for me, I had a bad experience with it. There were some profits, but I couldn't defend my profits. And when you can't defend what you did, then you don't have a base to do it again. You don't know. It becomes difficult because you're not going to draw anything on the charts. It's naked trading. The whole principle is you're not supposed to put anything on the chart. Just look at it and make a decision. That's the whole fundamental basis. I've seen some books where people load some oscillators, and no, that is not naked trading. You cannot trade. You cannot say you're doing naked trading when you have the RSI there. When you have the stochastic oscillator, when you have the MACD. That is not naked trading. You have to have nothing at all, just one bare chart. You look at it and you listen to your heart or whatever organs you listen to, then you make a decision, and that is it's normally, yes, I don't know, I've read that whole book, I've read other books, but if you ask me, it's something really out of this world. It's something out of this world. It's like it's like the Force in Star Wars, something like that. But anyway, I'm going now for these charts. The NASDAQ, the Dow Jones, and S&P 500 index. They're there on the MetaTrader 4 platform on many brokers, and they are they have a very small spread. The spread is very small. That's where my point of interest is. Small spreads, so that we go straight into profit as fast as possible. When you take too much time in the spread eats up your profits. And these charts, they have very, very tiny, very tiny profits. I think my charts have loaded. Let's take a look at some charts right now. Let's take a look at the NASDAQ. I don't know if it's normally available on every broker. I don't know if it's available on this particular broker, but look at all these charts. So many nice charts there. I think these are stock charts. Okay, these are stock charts. I'll be going for this. This is Apple. This is American International Group. AIG. We have Amazon, American Express. There are so many nice stock charts in there. I'm going to be going for them. These are the indices. Here we have the Dow Jones. It is US 30. Then we have NASDAQ, US 100. Then the S&P 500 index. Then the UK 100 index, Japan. Okay, so these index charts are what I want to go for, and mostly because of the spread. The spread is something very, very important. So this is the Dow Jones. So you can look at the spread. It is 65. That's for the Dow Jones. The NASDAQ, it's 41. So US 100 is the NASDAQ. We shall go into why it is named like that. But okay, let me load the NASDAQ chart, and I'm going to show you the spread by, if you want to see the spread on your chart, you just activate the ask line. You go to properties, you right click somewhere in the space there, then you go to properties, then it will first show you this thingy of colors. You go to common, then you check this box of show ask line, yeah, then it will show you the spread. So in the 1 minute chart is where you can normally see the spread very well. Yeah, so in between there, where the price is, you see this white and the red. In between there is the spread. So for the Nasdaq, the spread is about it's a bit big. This is for the Nasdaq. So this broker is just Forex. The spread doesn't look very good on the 1 minute chart. Maybe for the Dow Jones, it could be a bit more favorable. So the purpose for this is to trade on the smallest time frames and trade trends which are in the smaller charts. So you can do this manually. It's very important to trade manually every day. So the spread is the spread is big on all these charts. Okay, this is the spread of these indices. Maybe if I put one of the currency pairs, maybe look at the spread of Euro USD. Okay, the spread looks very favorable. This one here is 6 on the 1 minute chart. Looks very tiny. Yeah, that is very favorable. Yeah, it looks very good. So this is the pro account of Just Forex. It normally has a very small spread. So I'm seeing 6, 7. That is quite good. But anyway, my interest is in these charts, these index charts. So for the Dow Jones and for the Dow Jones and for the S&P 500 index and the Nasdaq, those are charts of interest now. We are moving now from the Forex pairs, but we shall revisit them when we are looking at the non-farm payrolls. But for now, we're going to be looking at these charts. We see what affects these charts. They normally don't have fundamental analysis as such, but when you start facing difficulty in life, they say people who have become philosophical. People who have become, who speak some wise words. Those people have gone through some difficult times, so that's why they start talking like that. So these charts, their fundamental analysis is actually what affects the US dollar, because all these charts have, what you see here is just Nasdaq or Dow Jones or S&P 500 index, but that chart has a measurement, and that measurement is in US dollars. Its price is in US dollars. So when the US dollar goes up or down, it actually affects the movement of this chart. So you actually have fundamental analysis for all these indices and futures and whatever. As long as they are measured in a certain currency, then whatever affects the country that currency is based on, that will affect your chart as well. Now that is something that either you can read about it on the internet or in some books, or you can discover it the hard way, by going through some difficult times. You see non-farm payrolls is coming up, consumer price index is coming up, and you don't care about those events because you're trading synthetic indices, and somehow, things go against you and you can't know why. You can't know what went against you, how it happened. Yeah, because, it's affected by that price that your chart is measured in. So that is something you should keep an eye out for, especially for every other chart. Just know where it belongs, where it originates, what their currency is, and what could affect it, and you will make a better decision while trading. It's not good to be ignorant about such things. So what I'm trying to basically say is we must look at the economic calendar every day. There is no rest from that. Let's keep looking at it and seeing what events are there so that we know what to trade. Yeah, so let's just take a look at this one is the Dow Jones. Let's take a look at it and see, let's count how many pips are in there. This is the 1 minute chart. Maybe this one is too small with this spread. So maybe I will shift it to the 5 minute chart. Now with the 5 minute chart, we can't even see the spread because, the pips per price movement are very many, so the spread is it is caught up inside there. So here we have, you can go straight into profit, but you'll still have to pay off that spread in whatever trade you do. But here, if we Now these charts will obviously make more money than Forex charts. That is obvious. That's why people love synthetic indices. Now if I put these, these moving averages, let's say 50 there, and another one of about 100, so that we just look at only, we only look at the moving averages. We want to look at these moving averages to give us the direction of price. So here we have where price is, where price currently is. Okay, maybe these averages are too big. Let this 50. The 50 can be, no, but let them stay. Let them stay. What this basically means is, this crossed around here. So these ones will give you a signal. So here you basically, there's about 100 pips in profit there, but currently it's about 25 pips. That is in this new trend on the 5-minute chart. The previous trend, it started around here. This one went a maximum of about 600 pips. On the 5-minute chart, you have about 500 pips there. If you went up to the cross, you have about 370 pips. Yeah. Then the previous downward trend, this one is picture perfect. It started there and ended around there. It took a total of about 970 pips. 970. That is, that is quite. That can be a good trade. So by using a very simple strategy like the moving average cross, you can easily make some money there. This one's here crossed there to buy, and if you just went by impulse, there's about 250 pips inside there. This one here sold around there, and it went about 100 pips into profit. This one here bought at around this point. It bought until made a total of about 150 pips. So this is just using a very simple moving average cross. A very simple strategy. This one sold, made about 470 pips. So even if you take this one here, a very short trend, this one here obviously made a loss, but it went a total of about 59 pips. So you can see there are many pips in one small price movement on this Dow Jones. And that is quite, that is something to keep an eye out for. It's so that I want people to make quick money. This one here bought, went a total of 30 pips. It shot straight into about 40 pips. This one sold there, it went about 120 pips. Yeah, so I'm going through all these ones step by step. This one you buy from there, it will go into a loss of about 55 pips, then go into a profit of maximum 280 pips. Yeah, I think okay, I think that's the last chart for today. But what I'm trying to show you is that in these charts we have more. Pips to get some profit from, compared to the currency pairs and all the other charts that we've been looking at normally. And here you can use a very simple strategy on a small time frame to actually pick out some good trades. Yeah, so we're going to be looking at these charts the whole week. And yeah, so we shall continue from there. Tomorrow I will be having some things to present to you, but the charts will have changed so much from now, since we're looking at a 5-minute chart. So tomorrow there will be so many candlesticks between now and then, and that's the beauty of it. There's so much that will happen within that time. You can profit from it, you can make losses from it. It's entirely up to the strategy that you're using. But I was just trying to show you that a simple strategy can actually make you some good money in these small time frames, especially when you have many pips per price movement. Yeah, so that's it for today. Let's hope for the best this week. Have a good day. Goodbye.